Thought I would jump on, do this trade live again this morning so you guys can see it in action once again. So let's just see where we're at. Okay, so we've got our 1 hour. So we got our open high from yesterday, our low. Seems like we're breaking past here before we need to actually get in. So being that we're above that, I'm now going to move my next resistance to 33.20. Okay, so quite a strong area at 33.20. So depending how we close on this candle will depend if I take this trade up, because our box is essentially here. All right, so that is the standard. So did that close? Let's go 15. There it is. All right, so I just need to go to the 1 minute now, make sure we get that move over, get that close over, or even a retest down here and then something bullish on the 1 minute is fine as well. But ideally we want to be breaking back through that 3317, and I'd like to see a 1 minute close and then push us back up to, as close as we can get to that 3320. That's where I'd be targeting. Because we had that was our previous, that was New York close. So let's see. Here we go. We've got a whole minute yet. Oh, we need to break that. That's a good sign. See if we can keep above there. Not yet. Oh, too late, and straight to it, right? And this is what will happen sometimes, guys. You go to set up the trade and sometimes you miss it, but jumping in now is too high risk, right? So this is a great example of sometimes you're about to take the trade and you miss it, right? Did our analysis, we were early, we waiting to get into the trade at 3317, targeting a 3320 TP, but now the move has happened without us. So it happens. Sometimes you get in, and this is usually when I'm like, okay, well, we have price reject off where we were looking to get in, buy stop. Buy stop would help, but being that, price was where it was, just wanted to see if we were going to get a close outside of that. But hey, you win some, you lose some. Sometimes you don't even get in there for some. But great to see it play in real time for you guys as well. This is also, showing you that not every day you're going to be able to take the trade. But let's see it come and hit our TP. That would have been a nice, what was that? So a break there, 17 to, we call it 20 just below because of our, or even at 1950, right? 1960. Yeah, so 20 in between here now. So in that range. So really only a small trade on this move this morning because we kind of had a decent move before the opportunity to get into the trade based on the strategy. So, it was only a small trade that we potentially, that we did miss. What's that, 20, let's call it 17 to 19.7. So 20 pips, so not a big move this morning. But again, when we're considering our entries and our take profits, or if it's worth taking the trade, we're really looking at where price is most likely to get rejected. Okay, so that's the biggest thing, is not getting emotionally attached to what you would like to happen. Ideally, price gets here and we can trail stop it and continue it all the way back up to this structure where we've got, an order block. But again, it's just, where is price most likely to get rejected? You get in, you get out, you take profit. But here itself, so based on where we should be, and this is where you kind of determine as well, do I take a trade based on the risk reward that it provided? So the risk reward on this trade is actually not that great, even though probability is in your favor to come up and hit your TP and take profit. You're trying to, and this is where sometimes people get caught out on this strategy. I mean, like I said, it's been around for years, but probability to at least get your 1-to-1, which is roughly there at 33.21, is just fighting to get through this same support that we had to get through here. So if you do, cool, you've got momentum, probability, cool. But again, this may be, rather than in and out of the trade, price may get to this price point here, struggle to break through. If it doesn't burst through straight away, come down, you may be in a bit of drawdown, and price may actually go right against you. So for me, it's kind of like weighing up the risk involved in taking a full trade of a 1-to-1, depending on previous structure. If we've got any resistance that we're coming up to that might stop us from completing that trade, versus trying to force it. So it's easier to say no, there's potentially something stopping me from completing this whole trade, versus taking the trade and going, oh, I shouldn't have taken that because I could clearly see that there was a roadblock, right? So I try and simplify this strategy as easy as possible. And hey, you have wins, you have losses. But at this point here, if we did take that breakout trade and we had our wrist tied to at least that 1-to-1, and for me, I'm always about, your stop loss based on this strategy is ideally here, but lower than the 50, right? So if the opportunity here is like this, well, I still want you guys running a 1-to-1 risk reward. Okay, it's really important that if you're doing this challenge and you're going through the process, that you're doing a 1-to-1 risk reward. Because the moment you go like this and it goes against you and you start throwing out your numbers, then you won't get the results that you're hoping for. Okay, so it's better to not take a trade than to take a trade that is coming up against a roadblock that has probability of going against you, right? Because all we're doing here is trading probability on direction based on a certain time every single day, whether it be Sydney session or US session, to find these moves. Okay, so the strategy is very simple, but the discipline from, do I just take it anyway? Like yesterday, I probably shouldn't have taken the breakout trade because the stop loss, the move itself was quite tight, right? So we were running into a roadblock. So really important to assess that when you're making a decision, right? But here we can see nice clean, 20, 25 pips. If it's going to our 1-to-1, which is there. Yeah, we're kind of in that range of where it can break to. So looking like it wants to push there. Okay, there might be enough momentum to get us straight through that 33.20, but if it does, it's going to break like this, right? You're going to have a big candle push through. So support, 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 and break, right? So this is our first time to approach that 33.20. So if we don't quickly snap up and push it at 33.21 in this next 40 minutes on this candle, then expect to see rejection off here. But look at that, moving straight through. Guys, hey, sometimes you're in, sometimes you're out. but that's okay. But I just wanted to film this one live again this morning. That way you can see the strategy based on, how we take it. So yeah, look, we're starting to reject off this 3320 and our GP 3321. So that's that roadblock that we're coming into or come up to hit. See how it's rejecting now. That is it. So targeting beyond is just your risk factor increase. So here from the breakout to previous structure, cool, high probability to feel that. But then the moment beyond that just increases your risk. That is all. Is it possible that we still go to hit our take profit? 100%. But look at the size of the volume that is needed to break through this. You can even see previously as well. Big, strong area, 3321 to break through. Possible to break through. It looks like it's trying. But, and even further back, 3320, yeah. So watch this for a little bit longer and then I'll stop the recording and share it with you guys. So we've got a break and a retest on 3320. If we can hold above here and not pull back, we may get that momentum straight up. Oh, there it is. On this next minute, that's a good break and retest on the minute to see that we've got maintained momentum. But even in this scenario, this could be like you take a break, you take partial profits here, you move your stop loss to break even, and then fill out the rest of the rest of the trade. So once again, if I'm talking about taking partials, if you were trading with one standard lot, you could close 0.5, move your stop loss to break even, you take, some profit there, and then if the momentum is still there to push back up, you would close the other 0.5 at take profit. But our only time for consideration to move, to move my stop loss to break even is once we have passed 50%, right? We're not trying to take it early. You don't one candle move and all of a sudden your stop loss to break even, because there'll be many times where it goes up one candle, hits your stop loss, and then goes back and continues in that direction, right? So if we're following rules, it's okay, cool. We take the breakout, we hit 50%, we close 50% of our trade. We can adjust our stop loss to just above where our entry is to cover any kind of spread or anything else. That way, if it comes back and hit, we've made our profit and it's has the spread covered. And then next from there is just taking profit. So let's see how this one plays out, being that I'm here now. So see how we go. 3,320. See, this was a good sign. Break, retest on 3,320. Solid number. That, and all that simply means is we've got buy limit orders after that break holding at this price point now. So people are anticipating that we should continue up to 3,321. Right? That's the buyer's thought process. So that's why you'll see things happen around key levels on the 1 minute time frame. And again, I'm not using the 1 minute other than for entries, exits, but still my analysis comes from, at least observing what happens on a 1 hour time frame in regards to rejection areas, and then entry decisions made on 5 minutes, 15 minutes, 1 minute. But But yeah, so every day, same time, morning session, US session if you must, both. Someone asked me about the London session. I'm going to go back and test the London session, and then forward see it to see how it played out or how it's been playing out. So maybe there'll be opportunity to trade 3 times in a day. But the idea of the strategy is one trade a day, one asset, one time frame, right? Like you just get in that habit of knowing that you don't need to trade so many times a day. Can you? Yes, by all means you can. And if you're using this strategy, there is 2 opportunities throughout the day to take that strategy, but it really comes down to your discipline. If you make a winning trade in the morning session and then you go and trade it again at night and you lose, then cool. you're pretty much at potentially at break even. I mean, if you win the morning session and win the night session, cool, you're up. But that's like being in profit for all day, and you've been in many trades and then giving it all back. Like that's the one thing that throws a trader's psychology out, is that like you're up for the day. Be happy, be satisfied, walk away. Satisfaction as a trader is, found when we're making lots and lots of money, but when we're not, it's like, oh well, is this worth my time? Should I be doing this? It's always the struggle of the mindset of a trader, is that time versus money. Traditionally in a normal job or a business, you put in time, you get paid, right? Whereas trading is, you may get paid instantly within 5 minutes, but you also may get paid within hours. You may work on your trades and look at the charts and be set up for, waiting and waiting and waiting for many, many, many hours, and then still get it wrong. It can take a toll. Like it really affects your mindset, especially if you're like, okay, I'm going to, I'm aiming to make $1,000 this week, or $1,000 today, or 10,000, whatever it is, whatever the number is. You aim for that amount, right? But that's not the way that trading works. Trading doesn't care about how much you're trying to make. Trading will give you what the market is willing to give you, right? So a lot of traders that have these monetary targets, right? You need to just, while having a goal is good, like I have a goal every month to, grow at least by 10%. Some months I hit it, some months I don't. But the reality is it doesn't matter what I want. It comes down to how disciplined I am. Am I getting into trades too much? Am I exiting too early? Did I not just let it go to my TP instead of adjusting my stop loss, right? All these things come into consideration when you're going through the process, trying to be a profitable trader. So, there's, the real struggle in trading isn't so much the strategy. The strategy, many strategies, like I used to be a breakout trader. I trade the breakout based on triangles, based on, support and resistance, based on trend reversals. As a breakout trader, there's many times that we trade breakouts. And then I developed a strategy called the One Trade strategy. Not this one, but a different one, where the same concept is just sticking to one strategy instead of trying to, work out all these different strategies, because you tend to get paralysis by over-analysis, right? I'm sure you would have heard the term, but that really comes down to just you're in the trade and then your decision making changes because of all these different things you're thinking about. So the One Trade strategy was really based on, an impulse move, a retracement, and then a breakout, right? There's 3 opportunities to enter into a trade off that. And I used that for many years, and it showed me being consistent. And then coming across this strategy where minimal thinking is required, marking out a key support and resistance area, and then taking a trade based on a one-to-one strategy and letting it go regardless what happens. You know, the only time intervention comes into play after you've placed the trade is whether or not you're watching the trade and you want to take partials once price goes past 50% target, right? That is the only time there's intervention needed on this strategy. You can literally wake up in the morning, do your support and resistance where you find is important, and identify a trend and place a market buy order or market sell order, or place a buy stop or sell stop and walk away. Like, that is the beauty of this trade. So if you find that you've been struggling with that kind of setup or that process where you have to think too much, or you don't get into trades because you overanalyze, then 100% do the challenge. You know, the challenge is designed for you to take action without overthinking it, right? A lot of the times we go through a course, we go through a program, we go through a strategy, and all we do is learn. We don't actually implement, right? So the most important thing here is implementing the strategy. And that's the reason why I decided I wanted to do a challenge community, is because it takes people out of watching and learning to now I must take action in order for me to get paid. So guys, yeah, I recommend just doing the challenge. Don't overthink it. You know, I'm showing you from a live perspective, like as of, you know, how I've been trading, the results I've been getting. And that's all just me doing exactly this, jumping onto the charts, marking it out, and then going from there. So we had a break, a retest of 33.20, and then a continuation back up, but it seems like we have more sellers at 33.20 versus buyers. Okay, so taking, again, this is the breakout, take partials, and you're still in profit. Price comes back down, hits you here, starts to continue back up. I don't see that as a bad trade. Like I said, the reason why my only consideration for this trade in particular of not wanting to take it is that, you know, the opportunity to get in and get out was based on a previous structure, right? Right? So yes, if you got in, you got out, or if you got in and took partials, at least you're locking in profit. But here, if you got in and out, your risk reward is quite tight, right? Sure, we can adjust that up and do that. 3.15, probably a solid support area as well here, right, for that stop loss, or even having it just below. But it's just cautionary, right? So this trade I still consider a win. It was going in the direction anticipated. It's just about coming up to those roadblocks. So as you can see here, we closed here and pushed up. Right, our one-to-one, if we go off the actual, roughly there, right? So we're short-changed at the moment, only 10 pips, right? So still good, still breakout if you're taking, and again, target high profitability, or TPs, initial take profit ones, partials, whatever you want to call it, at previous structures, always a good area to consider. But that's pretty much it, guys. So I'll keep this going for a little bit longer. See if we get to our target. Right, we're playing around that 33.20 area, but let's see if we get to our target up here. And then by this time, you would have adjusted your stop loss to here if you've taken partials. But that's about it. But this is a difference from a breakout where a buy stop is ideal versus a this is the difference from a market entry, right? We price pushed up and just having a just market entry after we got the push out sign from that, or here is a buy stop scenario where you place a buy stop pretty much, a couple of pips above to catch that next move. So for me, when I see price move, what was it? By the time we broke out, it moved pretty quickly. So it moved to 3319. So if I would have entered in at 3319, knowing that I have a high rejection area at 3320, I've just increased my risk quite high, right? So I've increased my risk to go, oh, that is quite high. Maybe I should maybe I shouldn't have taken that trade, because we're forcing, right? Every time you jump, you take a trade into resistance, you need to consider probability of rejection or price not going in your favor. So for me, it's like, if I got in here and I took partials here, cool, I'm satisfied, I'm happy with whatever happens, even if we don't hit our take profit, because my break even's back here. But it makes no sense for me to enter in at 3319 after that spike, unless price came back and retested and then closed bullish above that range. Sure, that is another option, right? So it just comes down to you. Like when we do the session on the weekend, I'll explain all this for you, so that you can see that we come up, we come back down, we go, we break and retest is another way that you can use this strategy, right? Just depends. But look at that rejection. So this now is a tug war between buyers and sellers trying to push through. Remember, this is still a 1 hour on the 1 hour time frame. Look at the strength that it took to break through that level, right? So all it's doing now is doing the same thing. We're trying to break through that level to push up to that final TP area. So it's looking okay still. We may get there. I think it's good, recording. Stretch. Recording in real time, so you guys see how it plays out. So you guys see, key areas, things to consider. All this is just these additional videos that just build up towards, getting you into the challenge or prepared for the challenge, right? These are just considerations that you guys need to think about. And also when we do our first session, it allows you to ask the questions about the strategy. When do I enter? Why shouldn't I enter? Many things to consider. But the best thing about this strategy is decision making is usually influenced for you, right? You're not having to overthink it. You just got to mark the key areas, right? It's probability. We're marking the key areas of probability that we are likely to get rejected at. That is all. Coolio. Here it goes. So this is a nice rejection. This is a nice recovery. So we should get this momentum push us all the way to the top. Because usually if you're going to get a full rejection, it kind of happens pretty quickly, right? Usually you get a push, like 3320 being a strong area. If we were going to reject straight off here, we would have seen multiple pushes all the way back down, right? But the fact that we rejected off 3320 after struggling to get through it, and then we recovered straight away, this is a good indication that there's buyers coming into the market. Like, you can learn a lot off watching a 1 minute time frame versus watching paint dry in the 1 hour, because you get an idea of where people's thoughts are at with price, right? Where money is coming in, right? So this rejection to 1950, now pushing back up. That could be this here, 1950 could simply be tight stop losses, right? That there, liquidity, right? Price goes in between a buying and selling liquidity, right? Buyers, so there's sellers here, there's buyers here. Right now, all it's doing is looking for sellers again. Because when you think about price, you think about what is the most someone is willing to pay for gold, okay? Well, this is the most I'm willing to pay. This is the most I'm willing to pay. And then that there is, this is people selling because they're buying people that are trying to sell for a profit, right? Because as a trader, as a retail trader, as a banker, you think about how does it work? Well, it works from a standpoint of I want to sell something that I own for the most amount possible, and a seller is thinking I want to buy this for the cheapest amount possible, right? That is the psychology between buying and selling, and why price moves the way that it does. Is you just want to get the most bang for your buck, and so does the seller. The seller just wants to buy it for the cheapest amount possible. So that's all support and resistance is. It is simply determining, is this asset worth X amount or is it not? Do we have more people wanting to sell the asset versus buy the asset, right? So, it's interesting to watch, because on the 1 minute you see a lot of that. You see that determining factor. Is it now we're looking to buy, now we're looking to sell? Are we going to buy and continue to buy up here, or are we selling because there's not enough buyers above this price? Is this really our hold point at 33.20 and now we're going to reject down? Well, if we push back up here, another good sign that we've got buyers coming in, pushing it higher, right? Because that is what is happening. We are simply going between buyers and sellers. So we have a whole heap of people trying to offload at 33.20 based on previous structure or based on what happened last time we were here. We have a whole heap of people looking to place orders here at 33.19.50 roughly. So now we're in this tug of war here. So the winner between buyers and sellers comes down to who is willing to pay more, right? Price coming down. Yep, I'm willing to pay 33.19. I'm getting into the market. Or resistance 33.20. No, that's it. I'm out. Right, 33.19, 33.20. That is the tug of war. And here is just like, okay, we're on a high and we've been dipping, we've been going low. It's like gold is cheap, gold is cheap, gold is cheap. I must buy, right? And when you create urgency, you buy, and the market starts moving. You're like, is this the right time to buy? What do? We hit close to 33.15. We come back down. No, it's still cheap, right? We broke past. We're now above 33.15, right? This is psychology. Yeah, it's still worth it. And FOMO starts to kick in, and we need to get in, and we push again, right? So high, low, high. If we create bullish momentum from here, we've created a high, low, even giving more certainty to continue up from here. Right. So now I've got a bullish candle here. We push up to here. We're just looking for that break here. Cool. This is the decision-making time. Are we breaking above 33.20? Are we breaking below? Right, that is money-making decisions. So 3319. So yeah, see that 3319.99. So that means that the buy limit orders came into play here. People placing buy limit orders to take it up, market orders to take it up. But yeah, we're really at that area of it can go either way. We can reject off 3320, stay below, or we can hold above 3320. Oh, we're breaking down below, so we've got sellers coming in at 3320. So this is sellers buyers pushing sideways on that 3320 area. All right, so good lesson for challenges. Consideration of take profit areas. Look at any kind of strength from a candle. Sellers, buyers, right? Anytime you see big volume candles breaking through a key level, that's just for consideration. That if you're taking trades to that area, you've got to be prepared that sellers may be waiting for your orders, right? You're buying up, someone's selling it down. It is just about you being prepared that that may happen to you, right? So then you weigh up do I take the trade now? Do I not? Is it too close to where I need to get in? But like I said, the alternative option is if you are seeing that resistance is being approached, the taking partials is a good strategy. You may not make as much because your price may reject off where you're anticipating, come back down, hit your stop loss, and then continue up anyway. But in saying that, profit is profit. Right? You still had the right idea, you still had the right plan, but you wanted to lock in. So that is taking 50%, moving your stop loss to break even and taking 50% on halfway up there is not the same as going, okay, well, I'm scared about what's going to happen, so I'm going to adjust my stop loss to break even, right? You've done the analysis, you've taken the trade, you've done what you're supposed to. You're just locking in profits so that you haven't wasted your time. And if it goes and completes the rest, cool. You've still done the majority of the trade. So be happy with that. These are the decisions that you kind of have to make on your own if you're not trading with me live. But it all helps the process. It all helps you make those decisions, right? You become accountable for your decisions. You want to see how I do it, see how I analyze, then you can jump onto the challenge with me. Yeah, 3320, 3319. Up, down, up, down, up, down. So you had a rejection of the 3320. Still continue to push down. So we need some kind of rejection here, pushing us, holding us over 3320. Otherwise, we may need to grab more liquidity first. And if we're grabbing more liquidity, it tends to come in this fashion. Okay, so where do we have liquidity? Okay, so we've got liquidity here. And why do I say there? Well, there's an imbalance of orders, right? So when you get an impulse move, usually there's an imbalance of orders, so orders not filled. You have buyers come through, you've got a whole heap of people willing to sell down here. So if we don't get up over 3320 soon, then I would anticipate that price is looking to grab more liquidity first, right? And as long as price can hold in this area of imbalance, then we should maintain and continue back up. We'll test that 3320 again, probably get rejected again. But if we maintain on a higher time frame, then cool, we may eventually get that take profit. But for me, if I was at this point here and taking partials here and price started to come back down, cool. You know, you've made a good decision. If you take partials here and price breaks through, then you know you've still hit your TP based on your target. So either way, taking partials or letting it hit your take profit, or if it take partials and it bursts straight past your take profit, you're still making money, right? Adjust price moves like this a little bit and you adjust stop loss to break even. What tends to happen? Thank you. Grab more liquidity, continue back up, right? That's the reason why break retest exists, right? The retest is just picking up more orders before price continues in its original direction, right? So I've never been a fan of moving your stop loss to break even after price has moved out, right? It at least has to travel 50% of the way, right? So I'm gonna hold this video for another 5 minutes and see what happens from here. But after that, you guys, you know, I might do a jump back in and see where it's at. But being that, you know, that's a 1 hour candle close, I believe that it's going to be quite, quite unlikely to break through in this next 5 minutes. And then if it closes below this 3320 on this hourly, then I would expect further rejection down, right? Because if you look at the hourly candle, the hourly candle's already started to reject, right? It's pushed up, it's started to reject already because it knows that we've got sellers in here. So retail traders looking and going, I'm looking to sell, looking to get out of this previous structure. So it's already started that initiation. So if we close here in the next 4 minutes without hitting our TP, I would anticipate price to come back down first to grab more liquidity and then make it continue to proceed up from here, right? So this is where you see, and you can review it yourself. You can see where price is likely to come back down to, and all you're doing is looking for that imbalance. So unless we get something happen here soon, which I'm feeling not likely because it's already started to wick down. So for me, even if I didn't take this trade today, you know, it started to move out, started to have that play. Win or lose, you know, well, not win or lose. I did enter the trade, so there's no loss, but there's no trade. I'm happy either way to have not taken this trade, okay? Even if it went to the anticipated direction of where price was going to, I'm still happy to sat out of this trade because I didn't want to force coming in, you know, well, that was a 1 hour, 1 minute time frame here. I didn't want to force coming in off that at 3319 to try and make 10 pips, right? So you're kind of forcing, don't force the trades, right? Don't get caught out trying to force it. But because as long as you can identify those structures, you'll be fine. Don't force the trade. If there is, you know, movement or allowance to get to your take profit or just under, you know, like I said, I'm always trying to aim for at least a 1-to-1. There'll be times where it's just slightly under, but in order to give you comfort, you can, you know, adjust your stop loss up a little bit to fit that 1-to-1 structure. The reality is you just got to leave it alone, right? Once you have your take profit and your stop loss in place, you have to leave it alone. So we've got 2 minutes here. Looks like we're starting to fall off here. So I would say we're gonna, if we close below this area here, that 3319.50 where it seems to be holding, if we get below here in the next minute or two, the next 2 minute candles, I would still anticipate us to come back down first. So I'm going to shut off this recording and share it. Last 1 minute. Oh, look at it. Going for it. It's going for it. Nah. Struggle street, struggle street. 30 seconds. $15. All right, so now we failed there. I'd anticipate this. All right, that is where I'm thinking the next move's going to come. Okay, we've now just opened 3319 and we getting below. Interesting. Are we going to hold? Right, there it is. Grabbing. It's coming. It's going. Where is that liquidity? I'll wait for another minute or two. Just see if it drops straight down here. There it is. Look, see, this is the area it's hunting. And there it is. All right, so that is that anticipation. Now it's going to sort orders between buyers and sellers in this area. And now is it fear and rejection at 3320? Or is there buyers waiting now to take this back up? But I'm happy with the result today, guys. I'm happy that, didn't force the trade. Like I said, there was opportunity here to take, 50%, take partials. The move just happened too quickly, and, that's just what happens sometimes. Sometimes you get in at the right time. Sometimes as you're about to place the order, it, bursts away from you. But that is what it is. So, yeah. So, guys, that is another trade update for today. And when you understand imbalance liquidity, buyers coming back in now off that imbalance, then yeah, you can kind of help you determine on trades, getting in, getting out. If I enter a long here, what are the chances of price coming back down to that imbalance? These are things that I teach as well, but I don't want to distract you guys too much from, the actual trade itself. Like, this trade strategy is so simple. I don't want to distract you from that. So I hope you guys are well. Remember, we are doing a live call on Sunday, so highly recommend, if you're joining the challenge, get signed up. And I will see you guys again for, let's do another video tomorrow, and then I will see you guys on Sunday.